These aren't retail investors making these moves. These are institutional entities prepositioning capital on the XRP ledger because they know something significant is coming. The velocity here is absolutely insane. We're witnessing hundreds of millions flowing into stablecoin infrastructure while everyone's distracted by red candles and price volatility. This is smart money constructing positions in the chaos, using stablecoins as the on-ramp specifically onto XRP rails. And I need you to comprehend what this represents fundamentally. This isn't just another stablecoin entering the market. RLUSD is being framed as a regulated compliant bridge between traditional finance and the XRP ledger. It's the clean on-ramp infrastructure. It's the system that allows large players to move quickly without having to fight the compliance war every single time they interact with cryptocurrency. So when people ask, why does this matter for the ecosystem? Because liquidity follows rails, and rails that institutions can utilize without risking their entire reputation, those rails ultimately win. Every dollar minted isn't just a number on a screen displaying data. It's capital that now has a clear path it can take. And when that path is the XRP ledger, the entire ecosystem starts to transform fundamentally. Now let me state something clearly and directly. I'm not claiming stablecoins automatically pump XRP tomorrow morning. That's not how this mechanism works. What I'm articulating is stablecoins are the staging area for capital. They are the waiting room. They're the money is here, ready to deploy signal. And when enough capital is sitting on the rails waiting, the question becomes, what's the trigger event? Which brings us to regulatory clarity and its importance. Because speaking of clarity, that's not speculation anymore. Brad Garlinghouse publicly voiced support for the Clarity Act while meetings were happening at the White House. Coincidence? I don't think so whatsoever. This proposed legislation is being positioned as the framework that would finally give digital assets consistent regulatory rules in the United States. And the reason this matters is straightforward. Big institutional money doesn't need bullish vibes and optimism. Big money needs permission structures, clear categories, clear operational lanes, clear enforcement logic. Now here's the application and significance. Brad doesn't make political statements lightly, and he doesn't do it frequently. Ripple's been in a multi-year legal fight with the SEC. For him to openly back specific legislation publicly, it signals one of two things. Either he believes it's likely to pass through Congress, or he believes Ripple is so well positioned that they can afford to draw a line in the sand. My assessment, it's both simultaneously, because the Clarity Act isn't some pie-in-the-sky proposal in a vacuum anymore. With a shifting regulatory climate and institutional pressure mounting, this thing has legitimate legs. And Brad publicly backing it is Ripple basically telling the market, we're ready, we've been ready for years. Now the regulatory rules are catching up to reality. And listen, this part is bigger than XRP alone. Regulatory clarity doesn't just help XRP specifically, it unlocks the floodgates for the entire industry. Every bank, every payment processor, every asset manager that's been sitting on the sidelines waiting for consistent rules, they're watching this closely. They don't want to be first movers, they want to be correct movers, and clarity gives them the cover to move capital. Brad backing it publicly is a signal, like a bat signal going up. And institutions move on clear signals. But even with regulatory winds shifting favorably, none of this matters if the market has no liquidity to support movement. Which brings us to why the Fed just strangled cryptocurrency and what that means for you as an investor. Because examine what just happened. Massive drawdowns across risk assets in a short window. Crypto got wiped significantly. Bitcoin tried to rally and hit resistance. XRP, Solana, Cardano, everything's teetering on critical support levels. And here's what makes people confused about the situation. There wasn't one single obvious catalyst event. No giant exchange hack, no surprise crypto ban announcement, no one event that headlines can point to and say that's precisely why. So what changed fundamentally? The market is reacting to a very specific message from the Federal Reserve. Shrink the balance sheet, less liquidity, less easy money, more pressure on risk assets. When the Fed drains liquidity, it doesn't just impact one market sector. It squeezes everything that relies on abundant capital, speculative growth stocks, high beta tech, and yes, cryptocurrency. If you don't speak Federal Reserve language, here's the translation. Less balance sheet equals less liquidity. Less liquidity equals fewer bid supports. Fewer bid supports equals sharper drops when fear hits the market. That's quantitative tightening in action. And when people realize the punch bowl is getting pulled away from the party, they don't carefully sell positions. They rush for the exit door. Now here's the key insight. In a liquidity drain environment, the assets that survive are the ones with real utility, real institutional adoption pathways, and real regulatory positioning. This is not the season of meme coins. This is not the season of trust me bro narratives. This is the season where the market filters out weak projects and rewards the ones that can function in the real world with actual use cases. So the crash isn't random chaos, it's a filter mechanism, and XRP is positioning itself to be on the right side of that filter, which brings us to the most explosive piece of information that surfaced, and it's flying completely under the radar. Wisdom Tree openly stated something that should send shockwaves through the XRP community. They basically said there will be a supply shock for XRP before Bitcoin experiences one. Let's slow down and analyze this carefully. Because people obsess over Bitcoin's supply narrative, and I completely get it. 21 million cap, halving scarcity cycles. That story is powerful and well established. But here's what they highlighted. Bitcoin should reach its maximum supply by around 2040, about 14 years from now. Then they dropped the bomb statement. XRP could reach its maximum supply scarcity on a much shorter timeline within the next few years. Not decades, not a generation, years. And before the gotcha crowd jumps in, let's be clear and precise. Supply shock doesn't mean XRP literally stops existing. It means effective circulating supply tightens relative to demand and usage, and the market starts reacting to scarcity dynamics faster than people expect. Now, why does this matter fundamentally? Because when supply dynamics meet regulatory clarity, institutional infrastructure, real transactional use, that's not a pump and dump setup. That's a fundamental repricing of the asset. And I want to address something important because you're right. Nobody truly knows how much XRP is sitting OTC in private custody arrangements, in long-term holds, in institutional arrangements, in market maker inventories. People pretending they know exact numbers are playing a guessing game. But here's why the Wisdom Tree comment matters significantly. It's not a random influencer narrative or speculation. It's an institutional player on the record pointing to a scarcity timeline that the market is not priced for if adoption accelerates. Now zoom out and look at the cycle mechanics historically. A lot of this rotates through Bitcoin dominance patterns. In 2017, dominance peaked high and then collapsed, triggering a massive altcoin run. In 2021, dominance fell under a key threshold and unleashed altcoin mania. Right now, Bitcoin dominance is hovering around that critical zone again. What do we look for? Dominance rolling over, altcoin participation rising, capital rotating out of Bitcoin into projects that have real narrative plus real utility. And here's the thing, this cycle may not look identical to previous cycles. Institutions change the game fundamentally. Bitcoin is bigger now. It takes more capital to move it dramatically. We may not see the same parabolic blow-off top we saw in past cycles because the asset has matured. But smart money still does what smart money always does historically. It takes profits, it rotates, it looks for asymmetry and opportunity. And if liquidity is tight, if the Fed is draining the pool, then capital becomes even more selective. That selection pressure pushes money toward projects that can survive scrutiny, compliance, rails, integrations, and real-world function. So let's connect the dots between all these data points. While markets bleed from tightening fears, the XRP ledger is seeing stablecoins flood onto its infrastructure. Ripple leadership is signaling pro-clarity alignment publicly. Institutional players are putting scarcity language around XRP's timeline. And the market is distracted by volatility while infrastructure builds underneath the price action. This is why I keep saying if you only watch candles and charts, you miss the story. Price is the scoreboard, but adoption is the actual game. And right now, the game is positioning for the next phase. While traders panic sell positions, institutions quietly stage capital. While people complain about the crash, the rails for the next phase are being laid in real time. And the question isn't, is the price down today? The question is who is building, who is integrating, and who is preparing to move size. Let me add some additional context about why this institutional positioning matters more than most people realize. When we talk about hundreds of millions in stablecoins flowing onto XRPL, we're not talking about retail traders swapping USDT. We're talking about institutional-grade capital that's already cleared compliance, already passed KYC, already structured for regulatory scrutiny. RLUSD specifically is designed for these players. It's not trying to be the stablecoin for DeFi degens. It's trying to be the stablecoin that JP Morgan's treasury desk can use without getting fired. That's a completely different value proposition. When traditional finance allocates to crypto, they don't want to touch Tether with 10-foot pole. They want regulated, audited, compliant rails. That's what RLUSD provides. And the fact that it's built natively on XRPL means every transaction, every settlement, every movement of that capital happens on XRP rails. This creates network effects that most people aren't pricing in yet. More stablecoin activity means more validators needed, more liquidity required, more integration built, more eyes on the ecosystem. It's a flywheel effect. And we're watching the early stages of that flywheel starting to spin faster. The regulatory clarity angle deserves deeper examination because it's not just about one bill. The Clarity Act is part of a broader shift in how U.S. policymakers are approaching digital assets. For years, the strategy was regulation by enforcement. Sue first, define later. That approach terrorized the industry and pushed innovation offshore. Now we're seeing actual legislative frameworks being proposed that would create clear categories, clear rules, clear pathways. Why the change? Because other countries are moving faster. Europe has MyCA. Singapore has clear frameworks. UAE is building crypto hubs. The US was losing the innovation race by making it impossible to operate legally. Brad supporting the Clarity Act publicly isn't just cheerleading legislation, it's Ripple signaling they've been preparing for this exact scenario. They've built their infrastructure assuming regulation would come. They've positioned their products to be compliant from day one. They've established relationships with regulators globally. So when clarity arrives, they're not scrambling to adapt. They're ready to scale immediately. That preparedness is why institutional money is paying attention. They don't invest in companies hoping regulation works out. They invest in companies positioned to thrive when regulation arrives. The Federal Reserve liquidity drain is the context everyone needs to understand. We're not in 2020 anymore when money printers went brrr. We're in an environment where the Fed is actively removing liquidity from the system. Quantitative tightening means the Fed is selling bonds, which removes money from circulation. Higher rates mean borrowing is expensive. Tighter financial conditions mean risk assets get punished. In this environment, crypto doesn't get a pass just because it's decentralized. Capital is capital, and when capital gets scarce, it flows to quality. This is why the filter analogy matters. Low liquidity environments kill weak projects. They expose vaporware. They reveal which teams actually built something versus which teams just rode narratives. XRP has real payment corridors processing real transactions. It has real partnerships with real financial institutions. It has real regulatory engagement and real compliance infrastructure. In a liquidity crunch, those fundamentals matter more than hype. The supply shock thesis from Wisdom Tree is particularly fascinating because it challenges the conventional wisdom. Everyone assumes Bitcoin's supply dynamics are the only ones that matter. Halving events, scarcity narrative, digital gold. But XRP has different mechanics that could create scarcity faster. How? Several factors. Ripple's escrow releases are decreasing over time. Much of the circulating supply is held long-term by OG holders who accumulated cheap and aren't selling. Institutional custody is locking up supply in structures that don't hit exchanges. Payment corridors using XRP for liquidity remove coins from speculative float. If adoption accelerates while these dynamics tighten supply, you get repricing. The market isn't pricing this in because most traders think in exchange supply terms. They look at order books and think that's total available supply. But effective circulating supply is much smaller when you account for long-term holds, institutional custody, escrow locks, and operational usage. Wisdom Tree pointing this out matters because they manage billions in assets. They're not retail YouTubers. When they make public statements about supply dynamics, it's based on institutional level analysis. The Bitcoin dominance cycle pattern is worth understanding deeply. Historically, Bitcoin dominance peaks when institutional money first enters crypto. They buy what they know, which is Bitcoin. Then as that capital gains confidence and understanding, it starts exploring alternatives with better risk-reward profiles. That rotation historically triggers altcoin seasons. We're potentially approaching that inflection point again. Bitcoin dominance has been elevated, capital has flowed heavily into Bitcoin ETFs, but smart money doesn't stay in assets that have already run when better opportunities exist elsewhere. If regulatory clarity arrives for altcoins like XRP, if infrastructure is ready, if fundamentals are strong, that's when rotation happens. Not because Bitcoin fails, but because capital seeks maximum return. The difference this cycle is institutions are bigger players. They move slower but with more size. When they rotate, it won't look like 2017 retail mania. It'll look like sustained accumulation followed by steady appreciation as fundamentals get repriced. That's what we might be witnessing in the stablecoin flows right now. Let me address something important about reading market signals correctly. Most people make the mistake of conflating price action with fundamental development. They see red candles and assume nothing good is happening. They see green candles and assume everything is perfect. But infrastructure builds during drawdowns. Partnerships get signed during corrections. Institutional positioning happens when retail is fearful. This is why focusing exclusively on price misses the real story. The real story is who is building, what is being integrated, where is capital actually flowing. Right now, while prices are volatile and sentiment is negative, XRPL is seeing increased stablecoin adoption. Ripple is engaging with regulators on favorable legislation. Institutional players are making public statements about supply dynamics, and the infrastructure for the next bull phase is being constructed. None of that shows up in a candlestick chart, but all of it matters more than whether we close at 160 or 180 today. The framework you need is catalyst-driven, not price-driven. What are the catalysts that could reprice XRP fundamentally? Regulatory clarity passing in the US. Major bank announcements using XRPL for settlement. Central bank partnerships going live with RippleNet. Stablecoin adoption reaching critical mass on XRPL. Supply becoming demonstrably scarce relative to demand. ETF approval for XRP. Any one of these could trigger repricing. Multiple catalysts aligning could trigger significant moves. The question isn't whether these catalysts will arrive. Most of them are already in progress. The question is timing and positioning. Are you positioned when they materialize? The liquidity environment creates both risk and opportunity. Risk because tight liquidity means volatility. Weak hands get shaken out. Margin calls cascade. Fear spreads. But opportunity because tight liquidity also means the strongest projects get even more attention. Capital becomes selective. Quality gets rewarded. And projects that can demonstrate actual utility, actual revenue, actual institutional adoption become increasingly attractive relative to pure speculation plays. XRP fits that quality profile. It has a decade-plus track record. It has institutional partnerships that predate this bull market. It has real payment corridors processing real value. It has regulatory engagement that's further along than most competitors. In a flight to quality environment, those fundamentals matter. The wisdom tree supply shock comment is the kind of signal that's easy to dismiss but important to consider. They're not paid to hype coins. They're not retail influencers. They're an institutional asset manager making a public statement about supply dynamics. That means their research team analyzed this, their analyst ran models, their risk management reviewed the statement, and they still went public saying XRP could see supply scarcity before Bitcoin. Whether they're right or wrong, the fact that they're thinking this way and saying it publicly tells you institutional perspectives are shifting. They're not ignoring XRP, they're analyzing its supply dynamics seriously. That's the kind of attention that precedes capital allocation. So what's the action plan based on this analysis? First, understand we're in a liquidity-constrained environment where quality matters more than hype. Second, pay attention to infrastructure development, not just price. Third, watch for regulatory catalysts, particularly the Clarity Act progress. Fourth, monitor stablecoin flows onto XRPL as a leading indicator of institutional positioning. Fifth, Maintain conviction in fundamentals while managing position size appropriately for volatility. Sixth, don't panic sell when everyone else is fearful if the fundamental thesis remains intact. And seventh, recognize that institutional positioning happens during drawdowns, not during euphoria. This isn't financial advice whatsoever. Do your own research thoroughly. But if you're not paying attention beyond price action, you're missing the entire setup. The pieces are moving strategically. The question is, are you watching the right board? If you want to stop guessing and start following a real framework, you need a plan that works in any market condition. Bull, bear, or sideways chop. That's exactly why I created the 100X Club membership. Inside, you get the XRP Millionaire Blueprint, a step-by-step playbook that breaks down how to position around major catalysts, how to think in market cycles, and how to manage risk so one bad week doesn't wipe out your entire strategy. You also get exclusive weekly stock alerts focused on high-potential opportunities with detailed analysis. And most importantly, you'll learn how to grow your wealth with a repeatable system that works. How to identify winners early before the crowd arrives. How to size positions intelligently based on conviction and risk. It's about building a serious approach so when the market gives you chaos and volatility, you know exactly what to do with it strategically. If you want to join the 100X Club and get the XRP Millionaire Blueprint plus the weekly alerts with full analysis, it's in the pinned comment below. As always, if you got value from this breakdown, hit the like button, subscribe to the channel, and share this with someone who's still only watching candles while the real positioning happens underneath.